Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
I thought today we'd talk a little bit about charity. With it being the end of the year and the holiday season's upon us, I thought it was good to take a few minutes to talk about what the rules are as it relates to charities and what documents you need to keep. I get this question a lot from my customers and clients here at the end of the year, and I just want to summarize it in really two things. And taxpayers who claim a charitable deduction on their tax return must do the following, and these are right from the IRS code. And the first thing is they need to have a bank record or written communication from a charity for any monetary contributions. And the second thing is they need to get a written acknowledgement from the charity for any single donation of $250 or more. Now, there was an article written by the Tax Pro Center from Intuit, which came up with 6 facts for taxpayers as it relates to these donations and written acknowledgments, and I thought we'd take a few minutes to talk about them. And number one is taxpayers who make single donations of $250 or more to a charity must have one of the following. And these are really important if you want to get these deductions. And if you are ever audited, it's real important that you have this information. And that is, so we're talking about a single donation of $250 or more. You have to have a separate acknowledgement from the organization for each donation of $250 or more. Now, you could have one acknowledgement from the organization listing the amount and date of each contribution of $250 or more. So as long as they segregate those things out and show those as the separate items are $250 or more. Number two, the $250 threshold doesn't mean a taxpayer adds up separate contributions of less than $250 throughout the year. So they give an example here. If someone gave a $25 offering to their church each week, they don't need acknowledgement from the church, even though their contribution for the year are more than $250. So what they're really saying here is, unless you're going to give a single contribution that's more than $250, the accumulated, and a lot of people do this when they go to church or some other benevolent organization, they may send a monthly or a weekly or maybe a quarterly donation. As long as those are no more than $250 each, there's no need for a separate acknowledgement. Number three, contributions made by payroll deductions are treated as separate contributions for each pay period. So, a lot of my clients I've noticed will give money to the United Way. And that's basically characterized on the W-2 form, on the pay stub, sometimes on a W-2 form as well. So you'll use that as your acknowledgement. Number four, if a taxpayer makes a payment that is partly for goods and services, their deductible contribution is the amount of the payment that is more than the value of those goods and services. I see this a lot of times when a client will go to a charity auction or a silent auction, and they may buy a ticket, and that ticket would include a meal. Charities have gotten pretty good about making sure that they are providing their people with a acknowledgement of what the value of the donation was. I don't remember, there was one organization my wife and I attended, and I think the tickets were $100 a piece, but when we bought the tickets, they gave us an acknowledgement that said, the value of the meal you're receiving is $25 of this $100 ticket. So effectively, you've got a $75 donation per ticket. But you have to be really careful of this, because a lot of times, you'll think, well, I'll just conduct the whole $100. But if you were ever audited, that would be a problem. Number five, a taxpayer must get the acknowledgement on or before the earlier of these two dates. So if you don't get the receipt right away, there's some rules you need to be concerned about. Number one is the date they file their return for the year in which they make the contribution. So basically what the IRS is saying is when you make out the tax return, you have your tax return prepared, you should have your receipt evidence and acknowledgement of that donation before you finalize that tax return, because effectively you're making the attestation, the statement of fact that you made this donation. So you want to make sure you've got your ducks in a row and all set up. Or the due date, including extensions for filing returns. So if you're like a lot of my clients, you're going to wait till the last minute or maybe even file an extension, that does give you more time to assemble the documents that you need. Number six, if the acknowledgement doesn't show the date of the contribution, the taxpayer must also have a bank record or receipt that does show the date. So What I tell my clients in practice is to not only have the acknowledgement from the charity, and charities have really gotten pretty good at sending these out, but you also want to have a copy of the receipt, a copy of the canceled check. Now, I have a lot of clients that'll come in and say, well, Ralph, I just throw $5 in a collection plate every Sunday or whatever I do. And I said, well, that's fine. But if you're ever audited, that's really going to present a problem, because how can you prove that you did that? Now, a lot of churches or organizations will keep track of like an envelope number that says, hey, envelope number, 417, donated $600 this year, and they've done the accumulation for you. But if you really read the IRS code, I still think there's a problem there. So I always tell clients to use a check or some sort of, I know a lot of churches and organizations now allow you to do electronic giving. And I think that's great, because then you have a receipt, whether it's a credit card statement or your bank statement, which shows the deductions there. We didn't talk a lot about it here, but also at this time of year, it's a great idea to, do some clean outs and, look for things that you're not using anymore and do a donation to a charity such as the Goodwill or the Salvation Army. And I don't use those as the only ones, because there are a bunch of good charities out there, and I'm not endorsing any of them. In fact, one of the things I wanted to talk about here in the last couple minutes of this particular section is, how do you decide on which charities are good charities to give to? And I did a little research on this, and I'm not necessarily endorsing this website, but this website is really good, and it's called Charity Navigator. And what Charity Navigator does is it assembles information on these charities and really gives you some good information about, how successful are these charities at using the dollars they receive. In other words, for every dollar that they receive, how much of that dollar ends up going to the end recipient? If you're going to give money to a charity and they have a huge overhead, in other words, let's say, their money that gets to the end user of the charity is only 50%. Well, what that tells you is that 50% of the dollars that you're donating are being used for administrative expenses, maybe for salaries. And that doesn't make them a bad charity, but if a charity has a higher percentage, and I was doing some research in preparation for this particular segment, and a lot of the charities have a 96% rating, where that means that 96% of every dollar is being given back to the goal of that charity. So if you've got a charity for disabled veterans, as an example, and you've got to compare charity A versus charity B, this Charity Navigator website could really help you in that regard, because you want to make sure that your money is getting to the person you expect to, and that's what people's expectations are. You want to make sure that the money you're giving is making an impact. So this is where you need to do your homework, and you need to take a look and say, okay, what does this charity have that this charity doesn't have? And take a hard look at, what are their overhead costs and what are the benefits they're doing. But in the end, like I said, just to summarize this, keep your receipts, keep your acknowledgments from the charities. And now's a great time to do it, with it being at year end.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.